If you think this segment is helpful, please subscribe and smash the like button to help the channel create more educational content. Every borrower and seller is required to use a title company, and for good reason. Without one, you could buy a home that doesn't legally belong to you or sell a property that still has hidden liens. Let's uncover why title companies are not optional, but essential. A title company ensures that the property's title is clean. They research public records, confirm legal ownership, and clear liens or claims before the property changes hands. Their role protects both buyer and seller by guaranteeing that the deal is legitimate and final. Borrowers and sellers both rely on the preliminary title report. This document shows who owns the property, what loans or debts are attached, and whether there are restrictions. Without it, buyers could inherit unpaid debts, and sellers could face lawsuits later. It's the foundation of every safe transaction. Title insurance is why lenders require title companies. It protects borrowers from fraud, forgery, or unknown heirs making future claims, and it protects sellers by proving they transferred ownership cleanly. One policy can save both sides from thousands in legal fees or even losing the home entirely. Title companies also act as escrow holders. They collect the buyer's funds, hold them safely, and only release them once every condition is met, including paying off sellers' loans and recording the new deed. This neutral role protects both sides from fraud or premature transfers. Borrowers and sellers are required to use a title company because it's the only way to guarantee legal transfer of property. State laws and lenders demand it, not as red tape but as protection. Without it, nobody could be certain who truly owns the home. Another key reason borrowers and sellers work with a title company is to determine vesting, how the property will be held in ownership. The choice affects inheritance, taxes, and even family disputes later. For example, in joint tenancy, John and Maria buy a home together. If John passes away, Maria automatically becomes the sole owner. In tenancy in common, 3 siblings might share ownership unequally. If Anna owns 20% and passes away, her share goes to her heirs, not to her siblings. In community property states like California, David and Linda each own 50%. If David dies, Linda keeps her half, while David's half may pass to his heirs unless they held it with right of survivorship. A title-holding trust allows a family like the Smiths to place their home in a trust so it transfers smoothly to their children, avoiding probate. And in sole ownership, Emily buys a condo in her name only, which is simple but risks probate if she passes without a trust. So why must every borrower and seller use a title company? Because they clear ownership, insure against hidden risks, hold funds safely, and guide you on vesting. Skip them, and you risk delays, lawsuits, or even losing your home. With them, you close with confidence, protect your savings, and move forward knowing your ownership is secure. Subscribe to Money House Media, your trusted guide to mortgage clarity and protection. This video is for educational purposes only. Content may not be reproduced. NMLS ID is #1020597. And as Oprah Winfrey reminds us, I will forever believe that buying a home is a great investment. Why? Because you can't live in a stock certificate. You can't live in a mutual fund. Buying a home offers value beyond paper investments. It's a foundation for life, family, and future. Subscribe and follow us on YouTube and Facebook.